Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 12th of March. Starting off with the S&P, which is still remaining within this very narrow trading channel that's been in place since October. The red line's there, and obviously the risk that this is a rising wedge, so there could be a breakdown. But at least while we're above 50.80, looking for the top of this mini range at 5,200, which obviously would be a record high. If we do break through 5,200, then there's a chance of 53.80 is the best case scenario target by the end of next month. On the downside, we've still got the 49.80 zone in the floor of that gap, the last gap there in February, and also the area of the 50-day moving average. But at the moment, above that 50.80 zone, still have to say that this looks like a buy on dips. Moving on to the Nasdaq 100, and here the market also seeing that uptrend line there from October. That's around 18,000. Above that, we're looking for this market to still head up to that red resistance line projection, 18,600 over the near term, maybe during the course of March. Otherwise, again, like the S&P, we've got the chance of fitting that gap down to 17,500 in the 50-day line at that level as well. RSI still above the neutral 50 levels. It's in the low 50s, so that does suggest that the glass here is half full rather than half empty. And if we are going higher than 19,200, and the top of that October channel could be the best case scenario target by the end of next month. Moving on to the stocks, and starting off with Bally's Corporation, and here you can see strong price action yesterday through the 50-day line, $11.30, and through recent resistance, let's call it $12. Above $12, we're looking at the top of that rising trend channel from October as high as $16.70 sometime during the course of March. Nice little bear trap there before the break higher that we've just seen to start this week. Moving on to a stock which we have covered recently of late, BitOrigin, and here you can see that we've got these trading bands, uptrend line there from October around $3.30, the midline there $6.20, and then the best case would be up $10 by the end of next month if everything goes well. We've had an end of day close for a rising 50-day line around $4.60, normally a leading indicator on the upside. That suggests that we should be looking to $6.30 and that midline there on the daily chart. Looking bullish while we're above that support line there from October, $3.30, but ideally we stay on the right side of $4 now, given the strong close that we had yesterday. Moving on to a stock chart, which actually is quite similar to the last one. Here we've got Biofinity, and here we've bounced off the uptrend line there, in this case from September. That was around $1.40. We've hit the midline there around $2.15 as an intraday peak yesterday, and then obviously we've got the potential upside of March resistance towards $3.60 by the end of this month if we can get an end of day close through that resistance line there. Let's call it $2.20 in the meantime. But we've had an end of day close through a rising 50-day moving average there. That is quite encouraging for the near term. Moving along to a stock which hopefully will be a decent one over the recent past. Here again, bouncing off the recent support line, in this case from February, and a rising 50-day line there at $10.70. The gap higher through neckline resistance through the $13 area, and above that looking for up to $17 by the end of this month if we can stay on the right side of the top of the gap there around $11.70. Conduit is a stock we've covered many times here before. It's been an active situation, but here it looks as though after a lot of consolidation that we've had, the end of day close through the 50-day line, on this occasion, the first time since January, could work to get the stock moving. $3.40 the level there nominally. Looking for up to the top of the range there, $9 plus by the end of next month, if we have decent follow through from the floor of that rising trend channel from October. On to a stock which is also maybe a decent situation, interesting one actually, given the way that we have a potential broadening triangle base there. We've had all the downside explorations, especially at the beginning of the month. What we'd like to see now is a proper end of day close through the $12 level. We just managed to get just by that yesterday, but above the 50-day line, $10.80, looking for $17.50 perhaps as soon as the end of this month, if this is indeed a broadening triangle base and the triangle top there through the $17 level. New name is Next, and here we've got Finch Therapeutics also closing above its 50-day line for the first time since the end of December. In this case, $2.80, the 50-day line. They're above that, looking for the top of a broadening triangle from December, as high as $5 by the end of this month. We had a decent shoot for that area during yesterday's session, because obviously there was some profit taking after that. Next situation is also one of interest in the near term. Here we've got global, and here we've got a potential broadening triangle base after the sharp losses seen over the course of the latter part of 2023. Here we've seen a breakout of the falling wedge resistance line there around $1.65. Above that, we're looking for $4 plus as soon as the end of this month. Obviously, there is the barrier, the 50-day line there, but the price action of the last couple of sessions looks very strong after the hammer candle that we had at the end of last week. We move to another situation which is looking decent, and it's coming in the form of Lexicon Pharmaceuticals. Here, the reason for the enthusiasm is that the last rally started with an unfilled gap to the upside, where obviously we've got this rally starting with the unfilled gap to the upside off the floor of that rising trend channel from September and above the rising 50-day line at $2.07. Looking for $4 later this month, especially if we can get a decent end-of-day close through $2.80 again, which was recent neckline resistance. Star of the show by quite some margin is the next stock, which we covered very recently, Kidpik, and here you can see that we had a target there of around $4.90, $5 by the end of this month, and we've obviously overshot that. We've doubled that. In fact, the shares have very kindly told us where the next target will be, and that is up to $10.50. Obviously, we've come back after that, so the key here is getting an end-of-day close back above that line there around $4.90 plus, to then give us a chance of a fresh retest of the $10 zone. What we don't want to see is really any price action back below the $3.50 area, which was the September-October resistance zone. Revisiting a stock which we've had quite a few looks at, that is NextNav, and here, nice to see the shares breaking a line of resistance there from back in September, $4.80. Above that, we're looking for the top of that rising trend channel from October, as high as $7 later this month. Ideally, we stay above recent broken neckline resistance at $4.55. Ryde, another new name for us, and let's see if it can live up to the prospects of the greats. Not much charting data at all, but we're taking a guess here that the upper parallel of that support line there is at $10, and we're looking for that sometime later this month. Ideally, we stay above the floor of the latest gap, $5.30, ahead of a move to $10. So punchy call there, but hopefully the shares will step up to the plate. Now onto a stock which is a subject close to my heart, senior living. Hopefully we'll be old enough to get to that stage at some point, but here we've got the shares breaking our previous target there, just around the $15 level, and shooting much higher, upper parallel there of the rising trend channel from back in the spring of last year, heading as high as $32, and we're hoping for that to be hit by the end of this month, while we remain above the resistance zone around $22 on the way down. That was from back in the end of last year, or at the end of last year. Finishing off with another favorite here, which is a favorite largely because it has done what we wanted it to do. TRX Health, and here a stock which is sort of hit all three of our targets. Actually, the first one was at $15, second one around $25, and the third one at $40, which is that resistance line projection there from back in 2022. Current situation is we're hoping that we'll stay above $25 and head for a retest of $40 over the course of the rest of this month. That's it for me today. More updates tomorrow.